Greetings, market rebels. Welcome to this week's macro measure. I'm Wayne. My partner Ryan is working on our weekly market outlook overview, which will be coming out, I think, a little bit later today. It is January 22nd, 2023, a little in front of 11 a.m. here on the East Coast. And we will flash our trusty disclaimer there for everyone to take a good look at. Hopefully you're a speed reader. And then we will flash the trusty intellectual property rights notice. And again, do some speed reading on that. And we will go into what's going on in these markets. We're going to switch to a different screen now because for some reason, PowerPoint just insists on doing things its own way. And it's not cooperating with me in terms of where I'd really like to have the splash screen and the disclaimers for everyone to take a quick look at. So we got to get into screen 4, which should be right here. Yeah, it's right here. So I'm starting us off really with a quick recap of last week. And I think it's important because a lot of folks, a lot of folks seem to lose track of what's happening in the market, kind of the current environment. What's the status, right, of the recent rally, or maybe in the future, obviously maybe a sell-off. How are we likely to continue? And it's always guesswork. You can never say for sure, obviously, but we did flash the percent of stocks above the 20-day. Last week, we flashed the percent of stocks above the 50-day, and we flashed this one as well, which was the percent of stocks above the 200-day. And you can see this. Well, I'll try to. There you go. You can see that this got up there, right? This got up there during this week that just passed, but it was already up there when we concluded the prior week. Now, if you notice how going back in time, that's about as good as it's looked, really. Right, since the bull market ran into big trouble starting very early in 2022. So that's very interesting in and of itself, but it sort of tells you something too, right? That this was probably overdone, given what we've seen. Can it get more overdone? Yes, but we did note last week that a lot of the heavy-duty intraday timeframes were also showing short-term overbought. So I think when you combine this with what we saw last week going out, that's where you end up with this situation of you get a pullback, right? You probably should be expecting a pullback, and it was a holiday influence week. Here we are looking at the SPY, and this is what we thought, right? We thought that, hey, this has been a pretty strong pop, and we'll go into this briefly, but look, it's short-term overbought. Some of these things that we just looked at, percent of stocks above this or that, have gotten quite vertical. They really ran. You're probably due for a pullback. Where would you get to? Well, the first level I was looking to was that gold-colored 50 SMA right there. And this is, I pretty much say this almost every week, but so the market really did what we were thinking might be the most likely outcome, right? It delivered the most likely outcome, or most likely scenario, most favored scenario. But it did it in a way that was different than I expected. The first day, right, it started out, they played some games up here, made it look pretty bullish after it opened. But then eventually it reversed, and I believe some news may have inspired that. I can't recall it at this moment. Then it held barely above the 200 there by the end of that day on Tuesday, first day of the trading week. Right, yeah, first day of the trading week. And then the 200 was there in purple. And then you have more of the same, really. Start out, everything's looking wonderful. And again, this is why we try to wait on some of the TNT names and in Rebel Pit, and why we always note that by 10:30, you'll probably see the higher low for the day about 80% of the time. And that's, I didn't look into these two, but it's about where I think we did get that kind of higher low, in this case, the two highs, and then they back things off from there. But we dropped way down to the 50 in that one session. And that's another thing I say every week is it did sort of what we thought, right? But it did it in a way that I wasn't expecting it to. I didn't expect this kind of a big drop. I thought it would take another, once this held on on Tuesday, I thought we'd probably drop down to somewhere in here and then probably hold around there. Maybe Thursday, drop a little further, see what happens to the 50, but they dropped it quick. And then what happened was, right, the next day, they brought it way, way down to here, very quick drop. And again, I think you just keep in mind, if you're new at this stuff, what's helped me is to look at sort of this slope, right? If that's a really vertical slope and it's gotten ahead of itself a little, moved up a little too far too fast, then a little too far too fast, then you can expect things to happen like this, where you break sharply. So a little sharper than I thought, a little more quickly than I thought, got down towards the 2100, which was really the confluence coming into the week of those two, was where I thought would be the next level. Didn't quite get to the 100, just above the 20. But the interesting thing is, you can see this, and I'll try to click on it to highlight it. But what happened was that you got to, well, that doesn't help, it probably makes it worse. You got to the 50% retracement on the SPY from this low all the way up to here. So that's what they gave you. And that was really right near where this box is that I just highlighted. And that's where we broke out from. And it came back to there. And as I've said a few times, BMC, Brian McCormick, fellow market rebel, he's been charting this hourly like he likes to do. And he's flashed that, I think, in cocktail hour. So we've both been looking at really the same level. And it came back to there, tested it. And now you can see that a lot of the short-term SMAs are moving with a positive slope. Even the 150, I think, let's check. Oh, I can't on this chart. But the 150 is even sloping up. So really, I think the last one that would probably slope up is the 200, because the 100 down here will respond more quickly. So the 100's starting to flatline. So almost all of these are up, basically starting to rotate up. So that's the kind of quick recap of last week, or even slow recap of last week. But then just a little bit more recap. Remember that what we did coming in for the year, right? We said that we thought coming into this year that if this broke one way or the other, we just had to wait to see what was going on. But we looked inside the market, so to speak, with market breadth measures, and also with looking at some heavyweight stocks. And they kind of started to switch around, the heavyweight stocks, that is. We started to see some positive signs, probably some silver linings from some of the really heavyweight components that were beaten down. And when you add that, in my mind at least, when you add that into this market breadth view that I think I can share here. Now, we don't really have to go into the details on that, but we've been noting, right, since the October low here in SPY, that you can see that these breadth measures by and large have improved, right? They don't have this profile where they're still worsening as they did, throughout at different times throughout 2022 and probably even late in 2021. So these are getting better. Now, this is not some lock, right? Hey, market breadth is getting better, everything's going to go. The major indices are going to go, but it is a positive factor, in my mind. So we did say wait for a possible breakout or breakdown out of that box. We got that, and then we got up to the 200, which we were expecting. The only thing we want to note here is notice, and let's magnify this, but just notice of late, right, that there's been a lot more advancers than decliners in terms of the ratio. If you go back to late last year, on the down days, these red bars are not all that bad, and not all the green days are phenomenal, but they're certainly better looking as a package than the down days here on this reading. So this is why I've continued to think that they're going to keep attempting to try and to see what they can do. And I think after reviewing things in preparation, and I apologize, there's nothing I can do about this. Like the way that I chart, how can I explain it? The way that I chart is a way that I developed on my own, really, just from doing my own trial and error and different things and seeing what helped me and what didn't. And so even though this looks really busy, there's a lot of other things I like to look at. I'm sorry, though, that this is really busy, but it's I know what everything represents, of course, and I know where I am, and I know it's super colorful, but I really can't talk about these things, I think, with any helpful comments if I'm trying to go completely bare bones. And trust me when I tell you, this is not that. None of this stuff is that complicated, really. It's a lot of just classical stuff and a little bit of Fibonacci stuff, and that's about it. But this line I highlighted, this is the bear market resistance line up there in blue that's now kind of pinkish. So I changed the color of that because that's probably going to be the big talk if they can punch through the 200 first here in purple on SPY, and then of course these highs. That should put it within striking distance of there. And interestingly enough, I put a white line up here. You can see this white line. This is a line that BMC, I think AJ was close to this line. Ryan, myself, we were talking about this, a lot, at different points during last year up near this area. And there was a gap there as well that made it kind of an important area. And you can see they went back and they closed the gap right there, or even right here. I'm not sure which time. I think even the first time they have closed the gap. So the reason that's a big deal, though, is because I do think that is a big time flat line right near, say, 408-ish, 409. And interestingly enough, some projections that I've been working with say, right, we should maybe get there if we continue higher. That would put you beyond, right, the bear market downtrend line that everyone, their grandmother, their great aunt, or everyone's watching this, right? And that's the thing is, you've got to be really careful. If you're new, you may not know this, but you've got to be really careful when everyone's looking at the same thing. I mean, this is an emotionally charged line here, is one way to put it. I mean, very emotionally charged would be my guess. Of course, there's really no way for me to know that. I just, again, from experience, really, I know when these big lines are coming into view of so many people, it can really create a lot of volatility. Now, I hate that this is going to be longer than I want, but it's sort of where we are. So the big thing, of course, that we noticed first a while back, maybe a month ago, say, or at least 3 weeks ago, is right that we did not fall. We were potentially setting up a base camp to make an assault on this line ultimately, and it tried to. You can see it right there, right? The line we extended out, it hit there twice and sort of mini double topped with worsening RSI and rolled over again. But they held this. This is what we started noticing. They held it in a base camp and they started to make a move. And of course, the first time it failed. But what I'm getting at with this is that, right, I would expect that they get this to there again. I just can't believe that they would get this close, have so many positive things in their favor in terms of market breadth, which I'll flash one more time, that's generally positive overall. And even the sectors, the way that they just lifted all of those. Let's see if this is the right one. And it's not. It is not the right one. All right, let's see. This is what happens when everything gets jumbled. Maybe it's this. Yeah. So I just wanted to flash sectors. We'll do sector situation right after this, but you can see that, just take a quick glance, you'll see that virtually all these sectors were up. And a lot of these sectors are suddenly looking, pretty good, right? Even discretionary, which has been really rocky. I think this is a good sign of, if some of these people are convincing themselves that things are about to get better. Staples coming off the last couple of weeks, discretionary going up the last couple of weeks. That's definitely kind of like risk on. And you can see Friday was risk on. Now it's becoming tough with options expiration to say, is everything legitimate? But I think what we're going to have to do is say, look, we know that it could be influenced by options expiration. It seems like that's happening more and more. But all in all, I think you got to just say, well, the price ended up where it did. In the end, like you could sit there and worry of how much of this is real and was there enough volume and all that. But, ultimately the price is the most important factor. And I think we have to just side with that. So I'm thinking, here's my thoughts now. So that's kind of the recap I rarely do of the week mindset we had, and then what's been happening kind of ending of this year into ending of last year into this year. I'm now thinking that the best way, right, to frustrate the most people, and again, let me show one other thing to kind of, well, it's not really going to though. I had a put call ratio somewhere, but what I've been reading, I don't think I can find that very easily, so I'm not going to waste time. But what I've been reading and seeing is there's really a heavy ratio in place. In other words, a lot of put owners relative to call owners recently, and that's continued to build from what I've been seeing online that some research firms put out or different folks put out. And if that's the case, it is hard for the market to go down when everyone expects a recession, when everyone expects a correction as a result of the oncoming recession. And you can count me in that camp. I don't think, without extreme sleight of hand, statistically, torturing statistics, that there's any way that they're going to avoid a recession. I think they've already gotten really close, if not there, and kind of was on the books that way. They're trying to claim it wasn't the case, but to me, like, it may as well have been. But and there may still be. I think there's a lot more to come on the negative front in terms of macro data and developments. But right, the best way to frustrate the greatest number of people, which some people think the market is all about, is to make it as if we're about to embark. The bear market's completely over, and we're about to embark on a new bull market, which we could be. I'm not even saying that's not possible. I'm just saying it could be. I still find it hard to believe. As I've said many times during these videos, cocktail hour webinars, I don't, even live events, I don't trade my opinion on the macro situation. I keep all the risks in the back of my mind, to respect risk and to be very diligent with position management and positioning, and being smart about owning some hedges, owning longer dated volatility that you can get a good pop on if the market does roll over again. But I'm not going to trade right in the here and now based off of this grandiose, macro take I've got, that I think we're at the edge of the abyss and we're really on our way there. I mean, it could be true, but I've never been a big believer in getting all, kind of like counter trend and fighting against the trend. Ever since my earliest days, when I found out how much harder reversal style trading is relative to trading with the trend, right? I learned that lesson the hard way very early on in my career. So early 90s is when I learned that. And after you get your butt chapped enough times, right, you either you wise up and say, well, this doesn't really work as well as I thought it would, despite all my best efforts, right? So I'm going to probably get away from that and maybe come back to it, or maybe not. So I'm ready to trade this as a bull for now, but I'm thinking the best way to get people to think that the bear's over is to put a forceful rally together. And if they do, I would think these would easily be eclipsed, right? That 409 level we're talking about, and they start to come back here, and there's gaps that got left back here that they may fill, right? They just kind of get it on its way and maybe attack this high and even maybe exceed that high and say, hey, this is really working great. Now, I think it could do that. I'm not saying it will, me, but I'm saying I think it could do. That's one scenario that I think we can't rule out. And I'll show you why right now. So this is going to be a little bit different macro measure, but let me just hit on a couple points that I think that scenario we're discussing will frustrate a ton of people, and I mean, it would probably have frustrated me nearly 30 years ago when I got started, because I would have thought, how can in my early days, how can stocks ignore these realities? But they can, and again, like it may never come. All the bad stuff that I'm thinking is on the way. Maybe Ryan is too. Certainly may never come. I mean, I think it will, of course, but you just never know. Now, they have been running the market generally into the Fed meeting as well. So that's another factor, right? Along with what we talked about, I think last week or the week before, about the third year of the presidential cycle. It's up strongly right from the start, and it continues on. And there's been, some market breadth developments that some people really believe will lead to a really strong year, at least at one point, without maybe you see a rollover later in the year. So that's really at odds with what I would have thought. I would have thought there was going to be trouble, frankly, in the first quarter or two about a month and a half ago. But when they started to do this, I'm starting to roll around and say maybe they're going to be able to act as if earnings aren't that bad. I don't know what they're going to do, but maybe the Fed will only go a little bit and then a little bit higher and then go into pause mode. And that seems to be, and if I can find this, come on, where's that at? Yeah, so if I can find that, right, here we are right now in greed a little bit. We're not anywhere near extreme greed yet. So there's room to run. And there's also room to run on the major index ETFs in terms of RSI, right? The bigger heavy duty intradays are not overbought, nor are the daily, the weekly, and so on and so forth in SPY. So there's definitely room to run, even with an alternative fear and greed index. That this is up there, but not near, right, super high levels. Not near super high levels in terms of where it could get to. You can see where it was April 2021, right? So it's not near the highs either, sort of similar to the CNN version. Again, these are kind of not ideal or perfect, but there's something for us to look at. And then here you have it seems like everyone's pretty convinced that we're only going to see a minor raise, right? 25 basis points, and that's going to be about it for now. Folks are thinking for the March one, it looks like maybe we go a little bit higher, but another 25 seems to be but that's possible. That'll possibly change. So what we have to look at, I think, is that the rally into the Fed thing has been happening. The Fed's disappointed them, and we've rolled over but it seems like to me that what they're doing now is they're gearing up in a way where they think they've got the Fed pegged. I think they're really thinking or at least they're allocating capital that way. And they're ready to say that this is over. And if we look at the charts, I think you'll see that. So I can't do everything. Unfortunately, it would take forever. Of all the things I've already looked at this morning, it would take such a long time. But you can see this is really great action here on IWM, right? Where we're all, we would all expect there to be resistance near this level, right? Look at the highs and look what happened subsequent to them. Back in here. So for resistance to hold the first time up is basically my default assumption, especially if there's been sort of a long, relentless rise, right? That would be my assumption, unless there's, of course, massive game-changing macro news. But it came back and did that old, push through the 200, pull back, test it, and try to convert it to support. What was resistance, convert that to support, bounce. So now it has just a little bit of maybe a day's worth of pushing to get up there, and it could break through more easily than after leaving that base and running for so many sessions in a row. So what about the SPY? Well, that also had a nice, not quite as nice to look at technically because it's below the 200. It's below the bear market downtrend line that everyone's looking at, but it did bounce, right? Pull back, bounce from the 20-ish level and above this support at the top of that box we've been looking at. Let's take a look at the diamonds. Come on, Thinkorswim. I don't know why it shifts me like that. The diamonds, right? They're we were talking about this, that maybe some of those industrials were maybe double topping. And I think I put a couple of those in. I think I think it was CAT, and there may have been something else. CAT, put a little UO8 Pro idea in CAT, and they took it down way quicker than I thought they would. I think we may have put it in here or that day maybe, and then it triggered the next day. I can't remember, but you can see that that came off, and some other big names that are maybe a little more, some that are more defensive, healthcare related type things. They came off. J&J comes to mind. I think UNH may have come off. stuff like that. But anyway, this has now come down, really, the diamonds have come down towards the bottom of that channel they were in. And we'll see what happens. They did rebound though, and you can see it would only take one solid day to put them right back above all the SMAs very, very easily. That could easily happen on Monday if they're going to move this market back up. So that would be a good sign if you're a bull, and then you would say, okay, well, what happens next? Well, then you just work on your taking out highs and flat line, then working your way up here. But once we look at some of the stocks, I think you'll see that these guys right now seem to be jumping the gun, in my opinion. They seem to be more poised to want to try to goose things overall. Let's take a look at the Qs. I'm just going to do something different. I'm not cover every single thing. It's just, I want to try to bring these things, somehow bring this video in a lot shorter, but you can see the Qs. Now they've been struggling because, right, the big tech has been struggling, and you can see that they're still downsloping on some of the longer term SMAs. But if you look at it this way, right, they are sort of setting up, come on, overdid it. That's my fault. They're setting up where they won't have to spend very much energy to eclipse the high of last week. And it sort of has like this mini kind of cup and handle-ish mini. I don't think it would qualify by the strict definition of cup and handle. This handle probably needs to be a little bit longer, but I'm not a person that gets hung up on strict definitions. I think sometimes it's close enough in this stuff. I think you're better off being fuzzy than rigid in charting. Anyway, the point is that this wouldn't take much to break out and challenge that 200. We're talking about, in the way the Qs move, right, we're talking about a move that really could happen in a couple of days. Let me take a quick look and see. As a matter of fact, let's see what the weekly ATR is on the Qs. It's about 15.5. So, right, if we have a strong day or two, that could certainly get towards the 200 and go. But this is where we are. Let me pull up some of these. I'll show you the stocks I'm going to go through. And I think if we're objective about what's going on, these are the stocks I'll go through, the big ones. And especially what I'm going to do first is go through the Q, the biggest ones in the Qs, the biggest holdings of the Qs. Okay, so you know what they are. I think a lot of folks kind of know what they are generally, but here's the order of them, right? Now, Apple's the big dog in there, and Microsoft would be next. But I think what you have to look at here is to say, look, I still think there's ultimately a lot more downside in Apple potentially, but it would happen during a bear market, not the creation of a fake bull market or maybe a legitimate bull market. Don't know yet, but this area here, right, is pretty big. They're not too far from the 50. You really can't complain, right? If you see this, I mean, I think this is definitely has a little bit more of a bullish look right now. The RSI, just check up there. I added a label there so everyone can see that more easily and made it white. Look, you're at 56. Does this have room? Yes, it does. But right now, I mean, if it crosses the 50 there, you'd have to say, where does it go next? Well, it goes up from there. It would be up towards the mid 140s and so on and so forth. So that, to me, when I look at the control, that is shifting control close to where the bulls will have greater control over it. The next big one in the Qs, remember, these are the ones that haven't really joined the party. The next big one is Microsoft. And this one, to me, is very similar in that it's close, right? It has kind of this higher low, double bottom-ish higher low, and then pulls back here almost to that resistance line we had in place, and then starts to go back up. It's really close to the 150 confluence. Of course, earnings are probably going to have the say. So that's what I was really getting at, is that if we're objective about these charts, which I think, that's what we strive to be, these charts are telling me that this stuff has overall, I think a lot of these things have a more bullish complexion, and the bulls have asserted a little bit more of a grasp over them. Okay, so Google is our next one. And we fortunately, I think we had Microsoft and we had, I think, Google and Amazon in UOA lately. So they've been coming in. I think I may have noted that in a video, but they've been coming in for those, and that's good, right? So if you're looking for the market to move back up, this is clearly trying to move back up, right? Probably got a little bit ahead of itself with that 1-day performance there. Maybe you need to take a little bit of the overboughtness out of it. I think it's overbought in the short term, but overall, right? I'm looking at this saying, well, let's just make it easier on the eyes, and I don't want to get too caught up in different things. And come on, there we go. So something like that right there would be a decent trend line. And you can see it's trying to break through that resistance that's there, which basically is the 100. It's basically the 100-day, right? We can see that in dashed white. Let's take a look at, I think Meta is next. Not comma, Eta, but Meta. That looks good to me. I mean, if UOA, we'll put it this way, if UOA, bullish UOA hit in a lot of these things, I couldn't get it in fast enough, the way that some of these charts are looking in, the way that the bulls are reasserting their control. Would I look at short-term overboughtness? Yes. Is this one probably a little short-term overbought? It is. I would note that if I could in the summary that I write up, so folks understand that you've got to handle that triggering if it happens soon with care, right? If it were kind of neutral in terms of being overbought, oversold, I wouldn't necessarily have to write that because it wouldn't really be starting another push from an overbought condition. But despite that, right, on the daily chart, it's overbought almost technically, but from my view, it's right under 70 on my daily RSI. And this one's a little bit different down there. So they're basically right near 70, but earnings are coming up. So I think they seem to be prepared right now to look maybe beyond earnings for now. I don't want to get too far ahead of ourselves because that could, if they hear awful stuff on these conference calls, it could change everything. But for now, where we are right now, leading up to earnings, these guys seem like they're ready to go. And the question really is, are they getting ahead of themselves with the way they're putting capital into these markets again? And now they're coming after, as we said, I think would happen ultimately, they're coming after some of the big names that were really smoked, that were not performing at all compared to other names, like even Tesla, which I still think has a lot more downside, just like Apple, than most people would believe. This looks pretty good. It's holding that line we've got in there. The short-term SMAs are going up, upsloping. The recent high isn't too far away. It could definitely clip that and go through there and then work its way up to resistance, which is a little bit higher. Will it do that? I don't know. You're just a few days away from earnings. I have no idea, of course, because I don't have time to follow everything, what Tesla will say. So here's another critical one, right? NVIDIA. So this is above the 200 and all the others. The short SMAs are all upsloping at this point. And you can see this sort of has like a cup and handle. We look at it a little larger, and we even traced that out and talked about it before. So yeah, I mean, if it can get through, right, if it can get through here, which is probably a big if, but we had this one also recently in UOA Pro. Look, that could start to really, a little bit more there, and they could make that look like, well, look at all these highs that have been taken out. Is that really more of an inverted head and shoulders, right, as well, in some people's eyes? Could be, right? It depends on how you want to look at it. But yeah, this thing could this go? And I think taking out highs and putting in higher lows and all that kind of stuff is what I look for. I mean, it did it here, which, during this phase, I would much rather be a person focusing on playing the long side as long as the market semis are rallying themselves. But I think it's pretty hard right now to say, well, that thing's terrible. Is it short-term overbought? Yes, it is. But am I going to trash the stock and short it? No, I would need to see, for me, I would want to see a break below the recent, that level right there on Thursday, that low of Thursday. But remember, it's a lot easier to win when you go counter trend and there's not a lot of support below. Unfortunately, between the flat lines that Ryan keeps, which are very important, and these SMAs, which stocks also tend to respect, at least temporarily, there's a lot of, theoretically, there's a lot of support. Could it just get smashed right through like it did? Yes, it did. But you can see there's a lot of sort of smaller candles in there where initially, right, the decline was solid, but day after day, but it didn't really fall apart until it got through clearance. And there weren't so many SMAs in the vicinity or holding it up or impeding its drop, put it that way. So, but, I'd be ready to switch around on it if it can't fire through. Remember, patterns, whatever patterns you see here, patterns that look like they're on the verge of firing and then really fail to fire, or they do fire initially and there's a head fake and then they reverse it. That can be very powerful too. You can get very powerful reversals as well. But I'm just saying, in the here and now, these big QQQ components, the holdings, I should say the holdings of the QQQ, this is PayPal. And PayPal's been kind of putting a consolidation together. It has earnings, but I mean, it wouldn't take much for PayPal to work its way back above the 200. Remember, a lot of firms like to see that happen, and they'll start adding positions, and that's how things pick up in terms of the momentum, right? So just keep an eye on that. So where are we? Yeah, I mean, I really like this Adobe chart. I gotta say, if Adobe call side activity comes in, especially, I see aggressive call buying, or I see something like a hedge. Like if somebody buys maybe like the 345 puts or 340 puts in a big way, I'm gonna say, look, they're probably trying to have a partial, like a hedge in place a little below in case the market rolls over. But this has this gap closure that to potentially work with. So it has a few dollars and it has the 200 to get to, but I think it looks pretty good. I mean, I think the bulls are slowly but surely trying to assert more and more control. And I do like breaks out of these defined ranges, just like we had in the market. So this one to me looks good. Now, that's the problem, right? I'm looking at this. I think if you're objective, you have to say, look, we've gotten some textbook pops and IWM is probably our best example. We've gotten some pops in the major index ETFs. They pulled back. They now are trying to use some form of support in most cases to work their way back up. And that's a good sort of textbook sign. And we also have seen a lot of these big stocks that have really not helped the rally as much as they typically do, or led the rally, starting to really take shape and look like they're on the cusp of putting together a rally. So my way of thinking about it right now is that if the Fed effectively, with a 99% expectation roughly, right, on the Fed watch tool, if the Fed just goes 0.25 and maybe changes a little bit of language, then these guys could easily be back in that mode. And like I said, the best way to frustrate the greatest number of people, especially with the put call ratio being what it is to basically create what appears to be a new bull market forming. And luckily, I think paying attention to this kind of corrective activity that got cut short of falling back towards lows, that was our first sort of like little hint. I think that third presidential year seasonality, if you will, or cyclical nature, that the third year tends to be the best year of all of them in the first term of a president. Again, these are not things that I've come up with. I'm just telling things, conveying things that I've learned and seen, over the course of time. And then this big line possibly being taken out, and these highs possibly being taken out, that would really get a lot of folks thinking that, hey, we could really be, this could be over. I don't think it will be. I still would reserve judgment, but remember, we would keep trading it like it is, as long as the actions there, and the breadth measures and other factors continue to suggest be a bull, because as everyone that's been doing this for a while knows, this stuff can be irrational. This stuff can be irrational for a lot longer than you'd expect, and it might not even be irrational, right? My take, Ryan's take, we do our best, but we're not macro experts, and we certainly don't have a team of PhDs providing us with the latest and greatest research. We don't have a team of statisticians that are recreating all the information out there, right? They're coming up with their own in-house version of, let's say, leading economic indicators or what have you, whereas the firms have that information. The firms see what's going on a lot better than, of course, we do. We can only base it on reports and different pieces we've read, things like that. But I still think there's a lot of fallout to come. But again, I'm just going to reiterate, if we're trading in the here and now and we're trading these markets, we've got to do our best to adapt to what the market's doing. I think objectively speaking, this looks primed to go. Now, I spent probably almost 40 minutes roughly talking about this, and it sounds like I'm super bullish. And as you already know, I'm not. But the charts to me there's a lot more of a bullish view or a bullish lean right now. Things continue to, I think, become more constructive for the bulls. Remember, though, these earnings can change everything, right? You've got the earnings are picking up this week in terms of a great number of companies will be reporting versus last week. The following week, I think, is when we have the biggest names of them all reporting, along with the Fed. And so you've got to change, right, when the market changes. So don't sleep on risk, right? Just because things look wonderful, it doesn't mean that it's over for the bear market completely. It doesn't mean just because the charts look great, they can't look like a failed break. They couldn't put together a failed breakout and then reverse hard, right? If they don't like what the Fed has to say or what the Fed does, or they don't like what some of these CEOs have to say or how they've performed. So you got to be careful, right? I think this is such a highly charged time frame we're coming into that you've got to be all over your risk management, right? Be smart. You've got to be, I think, quick to roll, quick to get quick trims in, roll a lot. If you're seeing big movement, don't let them snatch a lot of the money that you once had back from you with some kind of news item or something. I know there's sort of blackout periods, but I mean in the near future with these earnings, stay on top of what's coming out that day or upcoming after the market closes, the day before the market opens, the following day. Just stay up on that. Stay up on the economic calendar. Ryan will put these in market overview, market outlook, whatever you want to call it. So just be ready. I think you're getting into where it should be some pretty good trading, and there could be fallout from here. I'm hoping that I'm wrong about my macro concerns, and that the market really is about to enter a bull market that's legitimate in some ways. That's what I'm hoping for. I don't think that's the case, though. So on that, I'm going to wrap it up. I want to thank everyone for tuning in. I wish I could cover everything, but we're already running really probably long at this point. And I just really wanted to share all those things because I thought those were important more so than just taking a look at this, that, or the other thing. So I hope something to share with you helps you out this week or in the near future. And thanks for tuning in. I'll see you all in updates, webinars, and so on and so forth this week.